You wake up, get dressed, grab your keys, and the car is gone. Not in the shop, not around the corner, gone. No call that morning, no knock on the door, just an empty space where your entire transportation situation used to live. Or maybe you saw it coming. Maybe you watched the notices stack up and kept telling yourself you'd handle it before it got to this point. Either way, the car is gone. And now the real questions start. Do I still owe money on a car I no longer have? Why a company I've never heard of calling me about this same account? Why does my credit report show 2 different negative entries from one repossession? Can they actually sue me after they already took the vehicle? And how long is this going to keep following me? Today, we answer every single one of those questions. Because a repossession is not the end of your financial story. But what you do in the chapters after determines how expensive this one gets. Welcome to the Real Credit Talk Show, audio edition. I'm your host, Tiana Mayers, also known as Lady T. Founder of Beyond Credit Limits Corporation. And this is where we break down how credit actually works. Not from opinion, not from guesswork, but from how the system is designed to read you. This is a Beyond Credit Limits production. If you want to understand how your situation connects to what we talk about here, you can visit www.beyondcreditlimits.com. And if you've been tapped into the brand, you already know what it is. www.thatmerchmood.com. This is a space where we stop repeating credit myths, stop chasing surface level advice, and start breaking down how the system actually works. Not the watered down version, not the social media version, not the version people throw around without context. The real version, the structured version, the version that helps you understand what is actually happening when your name, your information, your accounts, your behavior, and your decisions all come together inside a credit profile. So wherever you're listening from, I want you to settle in. Because this conversation is not just about credit. It's about how your profile is being read before you ever get an answer. Now let's go. Today is not about your credit. Let me say that again. Today is not about your credit. Today is about the vehicle that got taken and everything that didn't leave with it. The balance that stayed. The entries that showed up. The calls from companies you never borrowed from. The doors that closed before you even knocked. Most people think a repossession ends the day the car disappears. The credit file disagrees. And today we go through every reason why. Let's go. Welcome to episode 16 of the Real Credit Talk Show. I'm Tiana Mayers, Lady T. I want to say something before we get into it. If you have ever had a vehicle repossessed, you are not alone. And you're not the story people tell someone who couldn't handle their finances. Most repossessions start with one bad month, then another, then something unexpected. Then the math stopped adding up faster than you could fix it. That's a human story. The credit file does not record the human story. It records the account activity. And the gap between what happened in your life and what ended up on your credit reports is exactly what today is about. We go through what a repossession actually triggers, not to just the score, but to the wallet, the next loan, the next apartment, the next opportunity. What most people get completely wrong about it. What the deficiency balance actually is and why it matters. Why your reports might show two different entries from one repo. And what your real options are when one is sitting on your file right now. We'll be right back.
Most people think credit is just a score. It's not. Your credit can affect where you live, what you drive, your interest rates, approvals, deposits, business funding, and even the opportunities available to you. At Beyond Credit Limits, we help consumers understand how the system actually works. This isn't about gimmicks. This is about structure, strategy, education, and financial positioning. Whether you're trying to rebuild, organize your financial profile, understand collections, prepare for home ownership, or create a stronger financial foundation, Beyond Credit Limits was built to help you move with intention. The consultation is where everything starts. We review your situation, identify what's happening inside your credit profile, and map out the next steps based on your goals. Stop guessing, stop moving blind, and stop letting misinformation cost you financially. Visit www.beyondcreditlimits.com and fill out your consultation today. Again, that's www.beyondcreditlimits.com. Beyond Credit Limits, because financial freedom starts with understanding the system.
And we're back. Let's get into it. Most people picture a repossession like a scene from a movie. Someone shows up, knocks on the door, announces what they're there for, gives you a moment. That is not how it usually works. How many of you stepped outside one morning and the car was just gone? No warning that specific morning. No heads up the night before. You're standing there in your driveway looking at the spot like, did I park somewhere else? That's how most repossessions happen. In most states, a lender can begin the repossession process the moment the loan goes into default, which, depending on your loan agreement, can happen after just one missed payment. They're not required to notify you before they come. They're not required to wait for a court order in most states. They're not required to knock. The one limit they have is they cannot breach the peace, meaning no force, no threats, no taking the vehicle if you physically object in the moment. But if the car is in the driveway at 3 a.m. and nobody's watching, it can be gone by sunrise. By the time you realize the car is gone, fees have already started stacking. Repossession agent fees, storage fees from the lot it was towed to, administrative processing fees, all of it added to the balance before you make your first call. The window to prevent a repossession is not the morning the car disappears. It's the moment you know you're going to miss a payment. Most auto lenders would rather modify, defer, or restructure than pay a repossession company to go over a vehicle they then have to store, auction, and process. A call made before the default has options attached to it. A call made after the car is already at a lot has a fee sheet attached to it. Here is the part that catches people completely off guard. The lender took the car, they sold it, and now they are still contacting you about money. How does that make any sense, right? Did you know that when the lender sells your repossessed vehicle at auction, and it almost always sells below market value, you can still owe them the difference between what the car sold for and what you still owed on the loan? That difference has a name: the deficiency balance. And it is one of the most misunderstood things in the entire repossession conversation. Here is how it plays out. You owe $18,000 on the loan. The lender repossesses the vehicle, they send it to auction. Auction prices for repossessed vehicles are almost always below retail value, because the buyers at these auctions know the seller is motivated and the inventory is distressed. The car sells for $11,000. Now subtract the $11,000 from the $18,000 you owed. Then add back the repossession fees, the storage fees, and any other administrative costs the lender applied. What's left is your deficiency balance, and it can easily land between $7,000 and $10,000 on a mid-size auto loan. You do not have the car, but you still owe the money. The lender has legal options to pursue that balance, including filing a lawsuit, which, if successful, results in a judgment. And a judgment comes with tools the original loan did not: wage garnishment, bank account levies, property liens. I have talked to people who found out during a mortgage process that a judgment had been filed against them on a car they hadn't had in 5 years. 5 years of thinking it was over, and it was still running. After a repossession, you have the right to request a written accounting of the sale, what the vehicle sold for, what fees were applied, what deficiency, if any, the lender claims you owe. In many states, if the lender did not follow proper notice and sale procedures, their right to collect the deficiency can be limited or eliminated entirely. You have rights in this process, but only if you know they exist. You had one car, one loan, one repossession. So why does your credit report show 2 different negative accounts connected to this vehicle? And one of them is from a company you have never once borrowed $1 from in your life. Have you ever stared at your credit reports and seen both the original lender and a collection account from somewhere else? Same dates, similar balance, different name, and wondered if the bureaus just duplicated something by accident? It's not an accident. Here's what actually happened. After the repossession and the auction, the original lender calculates the deficiency balance. They have a choice. They can attempt to collect it themselves, or they can sell it to a third-party collection agency. When they sell it, the collection agency becomes the new owner of that balance, and they report a new collection account to the credit bureaus. Now you have the original auto loan entry showing the repossession status, a collection account entry showing the deficiency balance, 2 entries, 1 vehicle, 1 original loan. But the entries are reporting on all 3 bureaus. Both are dragging the scores. Both have their own reporting timelines. And if the collection agency later sells that deficiency to a secondary debt buyer, a 3rd entry can appear. 1 repossession, 3 negative entries, all legitimate under the current reporting framework. Before you dispute anything or send any money anywhere, pull all 3 bureaus. Map every entry connected to this vehicle: original creditor, collection account, any subsequent buyer. Understand what each one is reporting, what balances they each show, and whether any of that information is inaccurate. Because inaccuracies at any level of that chain are disputable. But you cannot dispute what you have not fully mapped. A repossession is one of the heaviest negative entries a credit file can carry. And here's the part people consistently underestimate. The original loan balance is often not the most expensive thing about the repossession. The most expensive thing is what it costs you on every financial decision you make in the years that follow. Auto lenders, the exact lenders you need when you need another vehicle. Pull your credit and see the repossession first. Many have overlays that automatically decline applications, showing a repossession within the last 1 to 2 years regardless of the current credit score. So you need a car. You apply. You get approved at a rate that adds hundreds of dollars to your monthly payment compared to someone with a clean file. Across a 5-year loan, that premium can add up to thousands of dollars you paid extra for the same vehicle. Not because you couldn't afford the car, because the repossession was still on the file when you needed the next one. And it doesn't stop at the auto loan. Mortgage underwriters flag it. Landlords screen for it. Insurance underwriters factor it into premiums in some states. Employers in roles with financial oversight see it. The repossession entry reports for 7 years from the date of first delinquency. 7 years of being penalized at every financial crossroads for one event that may have taken 6 months to develop and 1 morning to execute. That math should make you want to know exactly what your options are. Let's talk about what the real options are and what each one actually produces. Option 1. Dispute inaccurate information. If anything about the repossession entry or the associated collection account is reporting incorrectly: first date of delinquency, wrong status, wrong balance, or fees that were improperly added before the auction, those are legitimate dispute grounds. If the lender did not follow proper repossession procedures under your state's law, those procedural violations can affect both the credit dispute and the deficiency rights. Disputing accurate information because you don't want it there almost never works. The Bureau investigates. The creditor verifies. It comes back the same. And you've burned a dispute cycle that could have done real work on something inaccurate. Option 2, address the deficiency balance strategically. If a deficiency is being pursued, whether by the original lender or a collection agency, negotiation is sometimes possible. But hear this clearly. Settling the deficiency balance does not automatically remove the repossession entry or the collection account from your credit reports. It updates the status. The history stays. What changes is the risk of escalation to legal action. And for someone working toward a mortgage, a resolved deficiency reads differently than an open one. Get every agreed term in writing before any money moves. Option 3, voluntary repossession if you still have the vehicle. If you know the repossession is coming and you return the vehicle yourself, it still reports as a repossession. Voluntary surrender is not a clean exit, but it can reduce the fees that stack up during an involuntary repo. The towing, the storage, the agent fees, which means the deficiency balance may be smaller. A smaller deficiency is less to resolve later. Option 4, strategic timing combined with profile rebuilding. A repossession entry loses scoring weight as it ages when surrounded by consistent positive behavior since Year 1 hits hardest. Year 4 is a different profile than Year 1 if you've been building correctly in between. But time alone is only a strategy if the deficiency has been addressed and nothing is being actively escalated. Waiting on the clock while a judgment is being filed is not patience. It is an expensive mistake dressed up as a plan. These are the moves that extend the damage. Assuming the car being gone means the debt is gone. The most expensive assumption in this entire conversation. The deficiency balance does not leave with the vehicle. It follows you until it's resolved or litigated. And I thought it was over is not a legal defense when a judgment shows up in your name. Ignoring the deficiency and hoping the status of limitations runs before they do anything with it. Some creditors and debt buyers specifically time their legal action to file just before the application deadline. Silence while you wait for the clock is an invitation. Paying whoever calls without verifying who owns the debt. After a repossession, the deficiency balance can move hands multiple times. Paying a company that no longer owns the account does not resolve the obligation with the company that does. Verify ownership before any money moves. Rushing into the next auto loan from the first place that says yes. The first approval after a repossession is rarely the best approval you can get. 6 months of intentional profile work before the next application can mean a significantly lower rate on a vehicle you'll be paying for the next several years. The worst time to negotiate a car purchase is when you desperately need one. Know that going in. If anything tonight connected to your situation, a repossession on the file, a deficiency you're not sure how to handle, or a credit profile you haven't looked at closely in a while, that is exactly what we're built for. Visit www.beyondcreditlimits.com and fill out the consultation form. We look at the full picture, every entry, every number, every goal, and we build the strategy around what's actually there. If you have a question for the show, submit it to the Real Credit Talk Show at beyondcreditlimits.com. Your first name and state, or anonymous, your choice. I read everyone. Let's get into tonight's questions. Nadia, California. My car was repossessed 2 years ago and I just found out the lender filed a lawsuit for the deficiency balance. I had absolutely no idea they could even do that. What happens now? Nadia, I need you to stop and take this seriously right now and not tomorrow. Right now. A lawsuit is not the same as a collection call. When a lawsuit has been filed, there is a deadline to respond. If you don't respond by that deadline, the court enters a default judgment against you, meaning they rule in the lender's favor simply because you didn't show up. A judgment is a completely different level of this situation. It opens enforcement tools the original loan didn't have. Wage garnishment, bank account levies, property liens, depending on your state. This is not a credit dispute situation. This is a legal situation that also has credit implications, and you need to handle both. Do not sit on this. Visit www.beyondcreditlimits.com and let's look at the full credit picture alongside everything that's being pursued. Corey, Minnesota. I voluntarily surrendered my car 3 months ago because the payments were killing me. Everybody told me voluntary surrender is better than a repo. My credit looks exactly the same. Did I get bad advice? Corey, the people who told you that were working from a half-truth. Voluntary surrender still reports a repossession. The notation might say voluntary surrender rather than involuntary repossession. But to a lender reading your file, the weight is effectively the same. Where voluntary surrender can help is on the deficiency balance, not on the credit entry itself. When you return the vehicle before they send someone to get it, you avoid the towing fees, the storage fees, and agent fees that stack up during an involuntary repossession, which can mean a smaller deficiency balance to deal with later. So you didn't necessarily get bad advice, you got incomplete advice. The decision may have been financially right for your situation, but going in thinking it would look different on the credit profile, that part was inaccurate. The focus now is the deficiency and the recovery plan, not relitigating the surrender. Amani, New York. My repo is almost 6 years old, and I rebuilt a lot since then. My score is in the 680s. My question is, when it finally drops off, is my score going to jump dramatically or barely move? Amani, this is such a good timing question, and I want to give you a realistic answer. The impact of a negative entry dropping off depends on what else is in the file at that moment. If the repossession has been the primary negative and everything else has been clean for several years, you can see a meaningful movement when it drops. Meaningful meaning noticeable, not necessarily dramatic. If there are other negatives still active on the file, the repo dropping off will help. But those remaining items will limit how much movement you actually see. Here is what I want you to do right now. Before that entry drops, pull all 3 bureaus and verify the date of first delinquency is accurate. That is the date the 7-year clock runs from. If it's been reported even slightly wrong, it may be staying on longer than it legally should. And know what you want to do the month after it falls off. Because if you've been waiting on that moment to apply for something, be ready to move. Derek, Pennsylvania. Totally random, but I've been hearing a lot about credit score simulators. Are those actually accurate, or are they just guessing? Derek, I love this question because it saves people from making decisions based on a number that isn't real. Credit score simulators are estimates. They use the data from your current file and apply general scoring model assumptions to project what might happen if you made a certain change. The problem is that simulators typically work from one version of one scoring model, and we talked in episode 7 about how many scoring models exist. The lender pulling your credit for a mortgage may be using a completely different model than what the simulator is calculating from. Simulators are useful for understanding general direction. If I lower my utilization, my score will likely move up. That directional logic is reasonable. But using a simulator number to decide whether you're ready for a mortgage application, well, that's a different conversation. And the answer to that requires looking at the actual credit profile through the actual lens of the actual loan program you're pursuing. Zoe, Wisconsin. I had a repo 4 years ago and I've been rebuilding. A credit union told me that they can approve me for a car loan, but the rate is 19%. My bank hasn't responded yet. Should I just take the credit union offer so I don't lose time? Zoe, I want you to slow down for just a second before you make this decision. 19% on an auto loan is not a reward for rebuilding. That is still a high-risk tier rate. And on a $25,000 vehicle over 5 years, the difference between 19% and 9% is not small. We're talking thousands of dollars in interest for the same car. Before you lock into that rate, wait on the bank. Check one or two other credit unions. Look at whether a larger down payment changes the offer. And look at your profile honestly. Is there something specific that's keeping you in a high-risk tier 4 years post-repo? Or is this rate reflective of the best you can do right now? Because if a 60-day wait and some targeted profile work moves that rate from 19 to 12, the wait paid for itself every month for the entire life of the loan. Urgency is expensive when it's self-imposed. Tiffany, Missouri. I have a repo from 3 years ago. I'm in the middle of a mortgage process and my loan officer said it shouldn't be a problem, but something feels off. Should I trust that or get a second opinion? Tiffany, trust the feeling. A loan officer saying it shouldn't be a problem without having specifically reviewed how that repo is reporting, which loan program you're in, and what that program's guidelines say about repossession is not reassurance. That is a guess delivered with confidence. Some mortgage programs are flexible with repossessions that are 3 or more years old. Others require the deficiency to be resolved. Others have overlays that make a 3-year-old repo a hard stop regardless of the score. You need to know specifically which program you're in, exactly how that repossession is reporting, and whether the deficiency balance, if one exists, has been addressed in a way that satisfies the requirements. Find out before the application gets fully submitted, not after, because a denial at that stage doesn't cost you the house. It costs you the hard inquiry, the time, and sometimes the opportunity itself. Visit www.beyondcreditlimits.com and let's look at the real picture before you go further. Submit your question to the Real Credit Talk Show at beyondcreditlimits.com. Your first name and state or anonymous. I read everyone. We started today with an empty parking spot. And by now you understand the car leaving did not close the file. The deficiency balance stayed. The entries showed up on the credit reports. The judgment risk started running in the background. The next loan got more expensive. The next application got harder to approve. All of it from one event, showing up in multiple places across multiple years. A repossession is survivable. People recover from them every single day. But the ones who recover fastest are not the ones who guessed their way through it. They're the ones who understood it completely, mapped every entry, addressed the deficiency with a real strategy, and built the profile back with intention. Tonight, you understand it more than you did an hour ago. That's not small. That's the beginning of the strategy. If episode 16 taught you anything, I hope it's this. The most expensive financial events are not always the ones that cost the most upfront. They are the ones that keep charging you long after the original event is over. A repossession that happened on a Tuesday morning can still be affecting your rates, your approvals, and your options on a Thursday 4 years later, if you never fully understood what it left behind. Understanding it doesn't change what happened, but it absolutely changes what happens next. And what happens next is the part only you can still control. If today's episode made you think about a repossession on your credit reports, or a deficiency balance you haven't fully addressed, or a profile you want someone to actually look at before your next big application, Beyond Credit Limits was built for exactly this. Our credit report analysis looks at every entry connected to a repossession, the original loan, the collection account, any secondary entry. What each one is reporting, what balances are showing, and what it's doing to your score and your options right now. Our strategic disputing process addresses inaccurate entries, wrong dates, wrong balances, improper fees through a structured compliance-based approach built specifically around your credit file. Not a template letter, not a one-size approach, a real strategy built on what's actually there. Our debt validation assistance helps you understand who currently owns the deficiency, what they are legally entitled to collect, and whether what's being reported and pursued matches what the law requires. And our financial strategy planning maps the path from where the profile sits today to where it needs to be for your next goal. A new vehicle at a rate that makes sense, a mortgage application, or simply a profile that stops working against you every time someone pulls it. Everything starts with the credit review consultation, 1 hour, your actual file, a real picture of what's happening, and a clear map of what comes next. Visit www.beyondcreditlimits.com and fill out the consultation form today. The profile that's costing you right now does not have to be the profile that defines what's available to you next year. But that only changes when you do something about it. Before I close, I want to leave you with this. No question is insignificant. Your questions matter because you matter. Knowledge creates options, and options create leverage. For everyone listening tonight who has been carrying a repossession on their credit reports and not fully understanding what it means, you now know more than you did an hour ago. Use it. Visit www.beyondcreditlimits.com and fill out the consultation form. Submit your questions to the Real Credit Talk Show at beyondcreditlimits.com. your first name and state, or anonymous. I read everyone, and your question may be answered right here. Hit follow. Turn on notifications because next episode we go somewhere else most people have never been taken. And if today helped you, share it because somebody in your circle is dealing with a repossession right now and has no idea what they're actually looking at. Send them this episode. Ask the question. Understand the system. Know what's on your credit file. And move with the kind of intention that only comes from understanding exactly what the system is reading about you and deciding to change it. This has been the Real Credit Talk Show, hosted by me, Tiana Mayers, Lady T, founder of Beyond Credit Limits Corporation. Visit us at www.beyondcreditlimits.com. And if you know the brand, you already know www.thatmerchmood.com. Until next time, keep learning, keep positioning, and keep moving with intention. Have a good night.